thank you very much for the introduction. So, actually, in preparing for the event, I was wondering why did the organizer put that topic on the agenda? And then you know why I stand here with my hand in my pocket, because the thought must have been, who's going to pay for all those beautiful things that we are talking about? When people run out of ideas, who's going to pay for it? It's either the government or the VCs. Well, we keep our hand on our wallet here, so. I think it was actually excellent that David opened up the day with the high-level view, a top-down perspective, the macroeconomics, because my perspective is much more bottom-up on where are we coming from. Now, I'm with Siemens Venture Capital, so I'm trying to be a good corporate citizen, so you'll have to bear with me for like a 1 or 2 minute commercial on who is Siemens and Siemens Venture Capital before we then move over to the topic of this discussion here. So Siemens, for those of you who don't know it, we actually claim to be a green giant. The environmental portfolio that Siemens is offering to its customers generated about 23 billion in revenues, and that's euro billion. Last fiscal year, our fiscal ends in September, and that's not just a number made up by our marketing department, that's a number audited by PricewaterhouseCoopers. So it's substantial, and the benefit we are generating from that in terms of CO2 avoided or CO2 abatement is growing by next year to the level of New York, London, Hong Kong, Singapore, Rome, Tokyo, Berlin combined, the total emissions. That's what the product we ship in a year is gonna save in CO2 emissions. So I have to admit, we are pretty proud of that. Siemens in the US is probably one of the better kept secrets. We're the largest foreign employer in the United States. Revenues over $20 billion, 64,000 employees, which I think is 2x that M company up in Redmond in Washington State. You open your mailbox, we've probably been involved in sorting that mail before it came in there. About 1/3 of the turbines have been manufactured by Siemens or a company that was acquired by Siemens a while ago called Westinghouse. So there's a lot of things in the public infrastructure which have been made by Siemens. You don't really find us in the Best Buy though, so that's why I sometimes say we are a better kept secret here. Siemens Venture Capital. Let me start off with what is not on the slide, and that's our mission. We are the corporate venture capital arm for Siemens, and part one of our mission is bring innovative technologies into the parent companies. So we've come to a point where we said innovation doesn't just happen within the company. There's tons of innovation happening outside of Siemens, and we need to find ways to bring that into the company. So we call that the Global Network of Innovation, and SVC is part of it by making investments in select startup companies where we see synergies to the operating business. The other part of our mission then is make money with those investments. So that's the other reason why I keep my hand on my wallet, because that drives my incentive at the end of the day. We've been around for 12 or almost 13 years now, invested over that period of time about 800 million euros. Mostly direct investments in startup companies, 140 and counting. We also make some fund investments, about 40 VC funds we've invested in over the years. Geography is North America, so really US a little bit, and Canada. Europe, but Europe we've been moving a little slower, you'll see in a second. Israel and Asia. When I say Asia, it's mostly India and China. And that's reflected also in the offices we have. When you look at the investment focus, this is structured in the way Siemens is organized, and we have 3 sectors, energy, industry, and healthcare. Actually, when you go through the topics there, you see that clean tech by now is almost half of that. Whether it's emissions control, renewables, smart grid level storage, water technologies, energy efficiency. When we put up lighting technologies, we really talk about LED lighting and things like that. Clean transportation, whether this is rail or on the road, all those are clean tech technologies. This is a snapshot of our current active clean tech portfolio. Active in the sense of we are still in those companies, actively involved, and actually in most of those companies we are involved on a board level as well. It's 15, I believe, and there you see about half of that is in the US, couple in Europe, couple in Asia. And I've tried to group it a little bit just for this conference here, from power generation, smart grid with 2 companies there. You see a lot in energy efficiency and across the different geographies, and there's different dynamics behind those deals in the different geographies. Then I marked it here as clean transportation. That's actually where storage is hidden in as well, because ISE has 2 parts of its business. One is hybrid electric buses, so that's clearly transportation, and the other one is the energy storage systems that go with that. So there's a storage business. Coulomb Technologies is charging of electrical vehicles, so it's just on the other end of the battery what puts the electrons in there, and not what takes it out of it. And then Power U, I have an energy efficiency, but it involves a healthy component of thermal storage actually on a commercial scale. Now let's talk a little bit about investment activity, and that's a totally different perspective than would. Go ahead.
Doesn't Siemens make wind turbine?
Yes, we do.
So that's not. Where was that in your diagram? Are you just talking about venture?
This was just venture.
Just venture. Okay.
This was just venture.
Okay.
Siemens actually is. The Siemens wind business goes back to an acquisition in Denmark, made, 6 years ago or something like that. In onshore wind, I believe we are now number 6 worldwide, and offshore we are number 1 or number 2. So it's a big part. I have it on my investment focus hidden under renewables. We are looking at a couple technologies there, which would enhance the performance of wind turbines. That's really the aspect there. Talking about investment activity, and this is a VC perspective, but I think we cannot ignore the public markets. As much as we would like to, saw the newspaper this morning and the Dow below 10, it's just no fun. What I've done here is I've plotted, thanks to Yahoo, over the last 2 years. I'm showing NASDAQ, and you thought NASDAQ was down. Yes, it was down about 40% there. But it's actually over that 2-year period, almost break even. Now, when you look at the other graphs on that chart, that's actually pretty good, and I think NASDAQ performance has been lousy over the last 2 years. So I picked a couple companies there. A123 is maybe one of the most prominent IPOs lately. They came out less than a year ago, and they are order of magnitude, and those data are from the weekend, a couple days ago. They're about 50% down since their IPO. I picked Valence, and those were just names that came to mind. I don't want to pick on the specific companies. There's no message behind that. I just had to pick a few examples. So their performance is even worse than that. Then I picked HEV, which is NR1, Enerdell, and we heard about them yesterday as well. I think in terms of technology, very interesting. In terms of stock performance, not all that great. They have actually been holding up nicely very, very long, and then the last 6 months, I guess something didn't go as expected. What struck me as a surprise is the performance of Maxwell, because Maxwell has been by far the best one in here. It makes me wonder why. Don't ask me, I don't have the answer. If you have the answer, approach me after this discussion here. Then now we're getting a little bit closer to the VC world, because VCs, those are by definition private equity transactions, but we write checks because we hope to get checks back a little while later. So where does our exit come from? And this is looking at the IPO activity, which is the most prominent exit. I didn't say the most frequent exit, but the most, everybody's shooting for it. And those numbers don't look too good. You see it kind of spiked in 2007, a dramatic drop after that. Year to date, there was some activity, I would say roughly in line with last year's performance. But then look at something else, and let me see whether I can point it out here. This shows the pricing summary. So the dark blue means the IPO actually priced above the target range. And the light color is when it priced within the range, and this is below the range. Go ahead.
Most people that do venture are kind of agnostic. I mean, they have areas, but they tend to be a little agnostic. Whereas Siemens, it seems like a lot of what you're trying to do is build companies that are complementary to what you've already got in your portfolio in the larger company. So isn't that notion of an exit strategy somewhat modified compared to the conventional VC approach?
You're asking an excellent question. There clearly is significant difference between a VC fund, financial driven, versus a corporate VC initiative. And a corporate VC initiative, it comes in all kinds of different flavors. Every corporation does it in a somewhat different way. Some are more financially oriented, some are more strategically oriented. Some start as an integral part of the parent company and then actually spin off over the next couple years and so on. So you find all kinds of different agendas for those. Those are general VC data. So what I've been talking about so far, and the next two slides, I believe, are generic for the entire VC world. And then there will be a couple more specific aspects. In terms of exit strategy, in our specific case, Siemens Venture Capital, we are the same as the market. So we always syndicate with financial VCs, which also means they are investing according to their rules, and they are not going to change the rules for us. That's just not going to happen. So it means as we syndicate with them, we follow their playbook, which also means they pursue the exit options that are available for those companies. So most of our portfolio companies get acquired. A few of them get acquired by Siemens, but that's less than 10% of our portfolio. So it's the exception of the rule.
But definitionally, corporate VC has some strategic rather than strict investment interest. Otherwise, they're just basically saying we don't know what to do with our cash. So you're looking for new technologies or new markets or something by making these investments.
Yeah, we always look for synergies with the operating business. So that's the first question. When we look at a candidate company, the very first question is that a technology that's relevant to the Siemens operating business in one or the other way? And then the second question is that competing, or can we somehow partner with that company, whether this is right away or whether this is something that's going to happen over the next 2 or 3 years or so. So we look for those synergies. And once we've established all that, and sometimes they say once we've passed that hurdle, then we put our second hat on, which is the financial hat, and then we say, what do we expect to get out of that investment in terms of financial returns? And at the end of the day, you can also say, within the Siemens conglomerate, we are competing for cash. We all are. The operating units ask for cash, we ask for cash. So then the question is, what are the returns you generate, short-term, medium-term, long-term, from those investments? And we need to position ourselves in that environment. Okay, going back to this chart here, I think this is something that worries me, besides overall IPO activity still being slow, and you've seen a different caliber of companies going IPO. I mean, those are well-established businesses, couple $100 million in revenues, profitable with a long history of profitability, many of them, maybe not Tesla, but there's a few of those. But what really worries me, here is a very nice quarter with a lot of IPOs priced above. You see this medium color there, that's IPOs priced below target range. So even with the low numbers of IPOs that we are seeing, many of them struggle to get out, and pricing had to be reduced. And then when you look at aftermarket IPO performance, and this is different time windows, day one, after 30 days, 210 days, and that 210 days kind of accounts for the 100-day lockup for the VC investors. So that's after there was the first wave of exit, really. And then to current, the performance is not all that great. Well, let's